Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about Super Microcomputer. This stock has squeezed up about 18% in a single day. So we're going to be talking about what's going on, answering that main question of is now the best time to invest in it. So guys, I hope you guys enjoy it. Like, subscribe, and if you guys want to learn more about swing trading, I've been a full-time swing trader for 6 years. And with that being said, we do have an amazing school where I teach you how to trade. We talk about my strategies, my mindset, how I find stock and opportunity. So check it out down below. You guys can use code YouTube, all caps, to get 20% off. So guys, I'll see you in there, but let's just jump into this here. So Super Microcomputer, also known as ticker symbol SMCI, is up 18% and climbing today. Now, the reason why we're getting so much buying pressure among AI lately is because we've seen a lot of analysts rate artificial intelligence as the best sector to invest in. Some analysts are giving a return near around 30%, 37% annually for the next 10 years for artificial intelligence growth. So companies like SMCI, Super Microcomputer, NVIDIA, Microsoft are all kind of following that path of getting a great amount of buying pressure. And today we had this article here that pretty much explains why we're seeing so much buying pressure. Super Micro pops 20% after S&P 500 selection. So it's pretty much got put in the S&P 500. As we look at the key points here, you guys can see Super Microcomputer stock pop 20% Monday morning after the company was selected to join the S&P 500 later in March. So not right now, but later in March. The record rally in Super Micro stock, driven by industrial-wide artificial intelligence boom, has propelled the company's market cap above $50 billion, which is incredible here. Super Micro will replace Whirlpool in the S&P 500 starting market open March 18th. So Whirlpool is now not in the S&P 500. And if you guys don't know what the S&P 500 is, pretty much the S&P 500 represents the top 500 companies in the United States. And the reason why this is such a big deal is because this is gonna now get put into pretty much hundreds of fantastic ETFs. ETFs is what a lot of people invest into for long-term growth. They represent, the S&P 500 represents the top 500 companies in the United States. It's a market index. You'll have people put money in it for retirement. And overall, this is going to propel the stock to get more money to reinvest back into the business to grow it larger. But just because the stock's up so much, should you invest in it? So, looking at, previous history, right now we're seeing this kind of gap where the stock went from about $900 to over $1,000 a share, hitting all-time highs. Are we going to get sell-off? That's the main question here. So I definitely think a little bit of some pullback, or not a crash, but just a pullback, probably near and around $1,000, is probably something probably normal that we will most likely see. But if you look at the RSI, which pretty much stands for the Relative Strength Index, you guys can see that right now the stock's trading for near and around a 70 on the RSI. Let's look back at previous history to see if we got sell-off at 70s. So you guys can see it was a little overvalued here, where we did get a little bit of some sell-off, a little bit in here. A little bit in here where did get some sell-off, a little bit in here where we got some sell-off. So as we look at it, yes, a little pullback could definitely be not necessary, but it could happen, and I do think a good strategy, if you guys are looking to possibly invest in this company, you could have really two mindsets. You could have one mindset of trying to wait it out and trying to see if we can get some sell-off from it. Should you do that, the con of doing that is you could possibly miss the stock going up. But I do think a good strategy would be to dollar cost average it. If you want to invest in this company, the best strategy would be to dollar cost average it. So you're investing consistently rather than just dumping a bunch of money in it. And the reason why this is great is because if this stock does sell off a little bit and you buy in now, maybe you just start investing once a week or every other week or whatever you choose to do. Now your average cost drops down. So once it recovers, your average cost is lower, so you can make a lot more money. It's a good way to invest in the growth stocks and stocks that could be a little bit overvalued. And I'm not saying this company is overvalued, just because if we look at some of the fundamentals, we're seeing the revenue up 100%. The cash flows down a little bit, but the revenue, the operating income's up, the net income's up. So yeah, it makes sense why we're seeing so much buying pressure. But if we do get that sell off, which could very, very well happen, you kind of have a little defense in your portfolio, which is always good. But guys, that is it. That is everything going on with this company. I hope you guys enjoyed it. Like, subscribe, and we'll see you guys tomorrow in the next one. Take care, everyone.